Hey everyone, Michael Workman here with this week's Resin Market Moves, powered by the Resin Smart team here. We are in the home stretch. It's December 12th, and we've just got a few more weeks left in the year. And I've got a lot of clients and folks in the industry that are packing it up for the holidays. The quick update here is across nearly every resin family, we're still seeing soft demand. There's been inventory reductions this year that have been driven more by the run rate management of the producers than by anything related to demand recovery, which is an important distinction because it limits how much power producers have with respect to pricing. The buyers shouldn't be confusing the inventory draws with fundamentally tight market, and that's really the core message across the resin families here. Starting in polyethylene, sales declined even though operating rates increased and inventories ticked up slightly for the month of November, which really just again tells us demand is very fragile right now. Days of inventory is in a manageable spot, but not tight enough to justify the increases that the producers are pushing in the market right now. But we've seen some for January that are really more about posturing than real demand strength. And for buyers, it reinforces the importance of having the right benchmark and strategy moving into 2026. In polypropylene, it's a market that looks tight on paper with inventories fairly low, but right now, it's fairly loose in practice. The rise in inventories we saw in November, combined with falling demand, suggests we are at the bottom of the cycle. PDH turnarounds are going to be important here in quarter one, but buyers have the leverage right now. So secure flexibility now so that you don't panic here in the first part of the year. In polystyrene, we are monitoring benzene prices as they are rebounding, but that's not going to be enough to push polystyrene. The market is just soft in the downstream market segments. Polystyrene pricing power is limited because the end use demand just hasn't been there. Buyers should really be pushing back against anything price increase wise for polystyrene. PVC continues to be very challenging. There have been multiple inventory draws, and the export markets are falling, and weak construction demand is keeping fundamentals soft. So, all in all, it's a market where supplier narratives on price are just not reflective of reality. So continue to push back in PVC. In the engineered space, ABS, polycarbonate, nylons, it's consistent, but not in a great way for the market in general. It's oversupplied. We talked about weak automotive demand, and consumer spending is just too uneven and is keeping pressure on price in a downward way. We should see some feedstock rebounding into 2026, but again, we're just looking for the demand to bounce back. PET is market where there is some risk with tariffs and trade policy, but the fundamentals don't get enough of the emphasis, and those fundamentals still heavily favor the buyer. So it's another example where you just got to dig a layer deeper. You really shouldn't see any price movement in PET from now until the end of the year. So putting it all together, the high level, macro level economy, the fundamentals from a feedstock and supply demand standpoint all point to the same conclusion. Next year, 2026, it's going to reward buyers that are planning and being methodical and benchmarking exercises and resisting reactive decisions. The opportunity now isn't just about saving a few pennies as we move into the year. It's about building a robust strategy that can be resilient when the market eventually rebounds here in quarter one. It's exactly what we're here helping buyers do with Resin Smart team. You want to learn a little bit more, DM me and we'll talk about it. Everybody have a great week. We'll talk to you soon. Thanks.